So this is going to be part 2 of order block. So we went through part 1, which kind of recapped what an order block is and how we can spot them in the charts. We're going to recap what they are again, and then we're going to go more in depth on how we can implement these in trading and what we can use them for specifically. So recapping what an order block is, it's a bullish. In a bullish case, it would be the final move up before the final move down before the move up, and in the case of it being bearish, it'd be the final move up before the move down. So these are two pretty good examples. I just drew these out. Again, we are going to go in the charts and spot these. It's way better if you just go in the charts and look at them versus drawing these. This is just what it will look like eventually, right? This is easier to draw and easier to look at, in my opinion. So there's two main uses for order blocks that I've seen a lot of people will say the same thing as well, is these are draws and liquidity and used for entries. I use both of these. I use them for my entries and I use them for draws of liquidity, so kind of take profit areas as well. Obviously, I don't need a bullish order block and a bearish order block in order to enter a trade, but these are just two main ways that they're pretty much in use. So again, going through exactly these order blocks, they're the final move up before the move down. And like I discussed in the last video, there's two kind of ways you can mark these out. So you can either mark this whole leg up, which I would not recommend. That's a large price range and nulling it, basically ineffective. I mean, you can't really, mark out like $300 with the price, $200 with the price range. It just becomes irrelevant. But I always mark these last wicks, right? So I will mark out this last candle, especially with this being a really, really nice one and showing a really good example of what I'm going to get into later. But it just shows it. And then this is a good example of what I would do on a larger candle. So I'll mark this out so that way I don't lose it. But we see the size of this. This is obviously a valid order block again, but it is a little large. I don't like the, how big it is, honestly. Like this is a big price range. So I'll drop down to 3-minute time frame. Bang, we have a couple good ones here. So we have this one right here. This is a pretty good order block. Honestly, I would pretty much just mark this one and call it good, because these are, again, technically considered an order block, but it's not the large move down, right? This is the big move down, right? For an hour and a half, we were continuing to move down, out more than that, 2 hours, right? 2.5 hours. So I would rather mark this order block out right here. Again, personal preference. You can mark this whole area out. It is what it is. Again, it shows a really good example either way. But that is basically how you mark these out in the chart. And obviously, it is the complete opposite for being bearish. So for this being the case right here, this is a 30-minute one. I'm sure if you go on the hourly, actually, it might even look a little bit better. But yeah, this would be a good example of a bearish order block. And this is what I would do on this one. So you have a couple options here. So what I would do is either mark just this bottom wick on this candle, because again, it's a very large price range. Either way you mark these, it's not that deep. The price is going to re-enter them either way, okay? So you're going to get entries the same way. It doesn't matter if you mark the bottom wick or this whole candle. I personally, like I said, would rather mark just that bottom candle. And like I showed in the other one, if the candle is that large, drop down to the 30-minute, it's still technically within that hourly order block. It's still going to be a strong confluence. But like I said, but that's what I've been stressing a lot, is these higher time frames hold higher power. Okay, that is the most important thing I think everybody needs to understand. Is higher time frames hold a higher power. So a 1 hour order block will always and forever be stronger than a 15-minute order block, a 5-minute order block. You will see them work more consistently. It's the same thing with that kind of breaker structure. When we saw that break of structure on the daily time frame, it continued to rally up, right? But then we see break of structure on the 1 minute, and you're like, hold on, wait, this is moving up. Why is this going down? It was a break of structure to the upside, right? So that's basically running through marking these order blocks and kind of how I would mark them, and we'll go in more depth in something else. So what I also use these for is price magnets. Price likes to come back to these orders. Obviously, with the amount of orders, liquidity, volume coming in the market within these specific areas, price is going to want to return to that area, right? We had a bunch of sell orders get filled. Why not come back into that spot and continue to fill more sell orders? Is this going to happen every single time? No confluence is ever going to happen every single time. The only confluence that's going to happen is price is going to move to the right? It's going to move forward. So that's the only thing that's for certain in these markets. Other than that, none of these are certain, right? So this is not going to happen. This isn't going to be as nice. You're not going to get, it's just going to tap in, it's going to move down, right? That's not going to happen every time. This is just a perfect example of what you'd want to see within a trade. I did take a trade here. You can see my arrows, actually. But yeah, this is what I like to see. So we'll go in the charts and show more examples of these. That's kind of why I'm actually showing these more examples, is I remember just learning about these in TJR's boot camp, and he did a great job visualizing these, not just writing a bunch of words out on a screen, actually showing. Obviously, I need to put it down in words to kind of get a good explanation as to what it is, because I need to explain it. But just being able to see it, it's a picture's worth 1,000 words, right? I mean, it's very true. Okay, so now that we are back in the charts, I'm gonna show some examples of order blocks being price magnets, right? Price wanting to come back, and there were a couple good examples over here that I was looking at, actually. Yeah, I mean, I guess we can mark this one out. So we have a fairly big leg down here. Then we have this final order block. Again, we return back to it and actually have a pretty good move up. Price did rip through this order block. Obviously, this is from a long time ago. I mean, taking a trade off of an order block based off the 20th on January is pretty tough to do, but it is an example of it either way. There are some really good examples. I already have one marked out here, actually, and it was on the chart. So this is a great example. Obviously, we have that final move up before the move down. We rally back up to this area. That was probably New York session, or no, London session, yep. We return back to this area. We tap in, and I'm sure if you scale down even to like the 5-minute time frame, you can see, yeah, I mean, price was not in there very long, did not hover around in that area, and just had a massive sell-off. So that's a good idea of it being a draw of liquidity. And then obviously the same case is for bearish order blocks as well. Price will more than likely want to return these areas. Again, these are areas where price is going to want to come back to. Price is going to want to fill these areas back in, fairly quickly. And I don't even know where I'm at in the chart. Okay, so this is on the daily time frame. So we'll have probably something to look at here, I guess. Yep, so we have this final leg down before the move up right here, right? We have that final leg up. We have our final leg down before the move up. What did price do? Price came back into this actually and tapped back in and rallied back up. So obviously, do not take trades off of this. You need more confluences, but that's why I'm saying order blocks are very good confluence, because price likes to return to these areas. It's a great price magnet, and it's a great confluence because, again, if buy orders were getting filled right here, why wouldn't price want to come back down here and fill more of those orders, right? So that is pretty much it for order blocks. So we went over exactly what they were, the final moves before the opposing move. So again, like this would be a good bullish order block. So we have that final move down before the move up. We have a good bearish order block right here. We have this final leg up before the move down. So it's important that you guys go through these charts. You're marking these out and showing examples of maybe what is an order block and what isn't an order block. So this is a great confluence to have. Again, we can take a lot of trades off of these. It's a great price magnet to show us where price wants to continue to rally up to. Again, we are moving right into this bearish order block. Actually, we kind of ripped through it. So yeah, so price likes to draw to these areas often. We can take trades off of them, and they're a very good confluence. This is one of the strongest confluences I use, other than liquidity sweeps, which we will get into very shortly. But for now, this is pretty much it.